It is October 17th, and it is a huge day in Canada's history because weed is finally legal. And for that reason, I brought out the Green Goblin, as I call it, to represent. But today, in today's video, we're going to be talking about the condo market update, what happened in September. We're going to dive into it coming up next. Pow! Alright, Michael J. Black here. Welcome to the channel. If you're new to the channel, make sure you subscribe, hit that notification button for more market details regarding Toronto real estate. Now, we're doing a condo market recap of what happened in September. The Toronto Real Estate Board released their numbers, and no big surprise. What's in the news is, yes, benchmark pricing, or the condo market has hit an all-time high. Hooray for that. But that is not the big focus of what's going on with these numbers. But let's get into it. The benchmark pricing now for Toronto and the GTA is $506,300, which is up 10.11% on a year-over-year basis. Now, City of Toronto is up at $535,600, which is 11.5%. Now, if you remember last market update in terms of last month with the condo market, virtually these numbers are the same. And if you look at the month-over-month increase, it only came up in the GTA 0.16%. And in Toronto, it was 0.37%, so a little bit better. So virtually, it's a flat line from last month. And that increase is actually the lowest it's been since 2014. So although we're hitting record highs, we're virtually in the same position as last month. Now, buyers are left a little confused with these numbers because although prices are continuing to go up, we're flatlining right now, and Toronto condo sales actually fell over 3%. In September, posted a total of 2,829 total sales, which is actually down 3.2%. The more dramatic change is actually in the City of Toronto, which represented 1,282 of those sales, which actually fell 5.5% from a year-over-year basis. Now, what does this mean? Obviously, City has dropped faster than the GTA, which I'm assuming coming in the next 30 days, we will see that ricochet into the suburbs, just because that's typically what happens with the condo market. It starts in the core and spreads out. Now, going over the inventory levels, inventory fell over 2%. TREB reported 3,298 new condo listings, which is actually down 5.9% from last year. Now, City of Toronto made up of 2,347 of that, which is also down 5.51% from last year. Existing inventory helped out, obviously, with the drop in new condo listings. But TREB reported 3,845, which is down from last year, over 2%. And out of that, 2,527 of City of Toronto, which is also down from last year at 3.54%. Now, when we follow the inventory levels, obviously they fell less than sales. So what this means is obviously there's pressure being relieved off of the demand. If this continues up, you're going to see prices beginning to decline, which obviously already with a flat line sales from last month, we're already beginning to see this. Anyone looking to get into the market, obviously the window of opportunity in the next little months, depending if this pressure continues to relieve, it's obviously a buying opportunity. Now, as we get into colder months, I do think this is what's going to happen. But inventory, although is is decreasing less than sales, I still believe, we're still looking at a heavy seller's market, as months of inventory is under 2. Like I said, once you're sitting closer to 3, it balances off, and then obviously if you hit over 5, it becomes a buyer's market. I don't see that happening, but like I said, if you're trying to time the market, there's a window. As long as the trends continue in the next little while, that you'll be able to get into the market with a little less, urgency due to the fact that, the buyers are just not there as much. So something to look out to, some good news. some bad news, I guess, depending on how you look at it. But I'd like to know your comments on this. Like, comment, share. And guys, I guess go get your smoke on because weed is legal. We'll catch you on the next one, though. Take care.